Welcome to TradeTheNBI.com. This is Jonas Reports for the 2nd of October. And what I say about markets liking shutdowns, they faked a little bit of a move towards the 76, but yeah, finished all the way. The highs actually made slightly new ones, which becomes, well, a little bit of an offset here to where the shakeout is. But as long as the shakeout continues to rise higher in the histogram, you're fine. It just has to take out the previous high, which would be right there at the 1896. We're only at 9 right now. So the potential for that run is what I talked about, where you would see shorts rising into it, and they kind of, make it seem like everything's wonderful because of the shutdown. And actually, all things being equal, the government being shut down really doesn't impact business all that much unless you're looking to get paid from them. From an NQ standpoint, even stronger, solid move there, and it's continuing. You can see the crossover here about to take place. If that continues, then you'll have a significant momentum. And we saw this all the way back when we were in the downturn here. We saw the rising gold pre-set up, and now you have the rising little azure line right there, and we look for when those meet and then begin to roll over, and that usually is your telltale sign that things have faded off. And it's even a little early for even the new fund money, so they may be pre-setting up for when that new fund money comes in to continue to add to shorts. We'll watch that NBI white on the daily. That'll be the key. Nothing happening from treasuries at all. The Fed is sidelined on this one, even though some of the job numbers and things that were coming out were weak. It looks like home buyers too are waiting until they think that lower rates are coming. So, those kind of stall effects, cause people to change behaviors, and when they change behavior, that's usually the result of not doing a thing, and not doing a thing usually means lower economic activity, but you still have your baseline of people need food and everything else. But you can wait to buy a house until rates are more preferable, and that's exactly where you'll see that equilibrium work out, and price will be affected, and that's the whole point of it. What changes Trump is going to make that he claims during this shutdown period, as far as trimming the federal workforce and stuff. We'll see how that plays out. But again, the more you move out of government and force into the public sector, the better economic vitality you have in the future, even though it's a short-term distress for some, and they'll include that in unemployment or whatever. But that'll just make Trump's case for lower rates anyway. From an oil standpoint, we're at the bottom end of the range now, and so this becomes a question. Are the Saudis able to push things enough to drive things lower and put pressure on domestic producers? And it's interesting, in the shutdown, Trump administration is still approving leases in that for drilling. So you have that build up. And again, this is where I talked about next year being that, whether it's the first or second quarter, you should see a significant turnaround. And I think that's probably why the Democrats chose the shutdown, because they're concerned that, improving and booming economy going into next year is not what they want to see, when coming up to midterms, and that they want things to be, a little bit more unhappy. The best way to describe it without being overtly. It's not about political. It's just about the economics and what it means from a market standpoint. So that's why we review these things, because it's important. From a euro standpoint, they're still excited. They still think the dollar is, going into zero, which is ironic given the fact that if it did, that they would be the first to go. But everyone's ignoring that for now. And of course, gold, cyan under red, we dip below the negative 13. That's a little bit of softness that will take place in there, but every time it bounces back above it, you're going to get another push up to the upside, and it's still pretty strong. At this particular stage, though, you get to that point where the D omega, the steel, while being under there, you've got rising red, and it's usually enough. But we'll look for a crossover here of cyan to green that could present some, what I would call, sideways trade, but not there yet. So everyone's still jumping into it, and that impact of the change in tier capital capability, and the fact that central governments are, scrambling for, gold, also I said would promote crypto. And there you go. Bitcoin's on its move back up. ETH should be following. It's a little bit slower behind, so you're starting to get an equilibrium to that early rise, and things have stabilized. all clean from that standpoint. So here was the early morning dip that was meant to terrify everyone. The slight open, and then from there it was just straight up and beyond, and you didn't even get much of a rise in MBI white from that standpoint, and then created all the way down to the ones. So no real strength from that standpoint because again, shutdown's not a horrible situation from an economic standpoint. Things have stabilized quite a bit. You can see, like I'm talking about next year, which is what the market is sort of focusing on, how things are going to be, and you can see from that 5-minute chart that was just pretty clean trade and not even much of a fill back into the Asian session, and then here in the European session. Just double click that one too many times. Slide over, there's where the European session is right now. So all in all, going as predicted, the volatility exactly what I thought would increase, and it's all working as expected. So no issue from that standpoint, even if it is tumultuous from some people's view, not really from ours. So it's okay. As always, anything relevant, I'll put it on our team chat. Have a good one. Trade well.